Aloha. Wow, urgent breaking news. We're about to show you something on these charts that we've never shown before and why today is one of the most important daily closes that we've had in months. Bitcoin has broken above this key resistance line multiple times for the past few months, but one thing it has not done is had two daily closes above it. We got a daily close above it yesterday, but today, if we actually get a daily close above this specific level, then it will be something that we have not done ever since we got into this descending channel for the past 2.5 years, okay? If we get a close at this specific level, we will do something for the first time in the past 2.5 years. Why is this level important, you might be asking? Because if we get this daily close, it will cement an actual break above this 2.5 year trend. It doesn't look too crazy on this longer time frame, but guys, this is such a bullish signal. We'll show you what exactly would have to happen, so stay tuned. And we continue our ascent. We will show you exactly what level we are about to retest, guys. This is absolutely huge news, and specifically the pattern that we've been in for the past 365 days. We broke out of it, however, there is still an odd pattern that is seemingly like an exact replication of the previous descending channel in terms of resistance support. So we'll get into that and we'll show you some very interesting data and some very interesting things that perfectly match up with the actual channel that we're still in. Potentially, we won't be in this channel for long. Rippy Skippy Doo, let's do this. Wow, what's going on, you guys? Welcome back to one of the most exciting webisodes we've done in a long time, and as well, it is the Hawaii edition of the webisode. That's right, we're doing a Bitcoin Hawaii edition episode, guys. If this is not one of the most exciting days of your life, then I don't even know what to tell you. This is huge, and specifically, we're going to be going over this one chart that I actually used a variation of a few months ago. The chart got deleted because for some reason my charts save as other random charts every once in a while, I'm not sure why. But we remade the chart, and what we found while remaking it was actually incredibly interesting, and there's much more data than there used to be on the previous iteration of that chart. And as well, guys, for everybody in T4, we actually uploaded it here as well. It is our Coinbase chart, so if you want to see the chart that we're going to go into very much detail in this video, it is going to be this Coinbase chart. And guys, huge, you guys have been absolutely smashing the comments, smashing the likes, so if we can hit let's be a little modest. Let's do 1,800. If we can do 1,800 likes in this video, we'll give away this bad boy in the next webisode. Make sure to smash, ding, turn on comments, likes, and don't forget to put on your favorite Hawaiian shirt. Wow, so guys, we have a lot to get into. I have some very key highlighted points of this very interesting long article, but the ones I have highlighted specifically relate to what we've been seeing lately. So let's actually start off here. We'll start off with the most boring information. This will take 20 seconds. Okay, breaking out of this still, we're currently still above that, which is very good. However, the most important thing, let's get into the meat and tomatoes real quick of this video. The most important thing here, first of all, some people might be looking at this and they say, you know, you got to either draw your trend lines on the wicks or you got to either draw them on the bodies, and that's it. Guys, I agree for the most part. However, the most important thing you should do when drawing trend lines is draw with the most touch points. So keep in mind, you know, if you go to the 4 hour, the 1 day, or the weekly, the candles and bodies are going to be different for each of those. So it's kind of an invalid way of even looking at the charts for the most part anyway. These candles and bodies are very subjective based on what time frame you're in, right? So that's one thing to keep a note of. So I draw my trend lines primarily based on how many touch points. The more touch points there are is how I draw these trend lines. So let me give you a little example here. We have our first touch point here. We have 2 touch points here because of this. Now, even though this went slightly above, and this is going to be a very key thing that we want to get into this video, but I want to just demonstrate this first. We see multiple touches here, multiple here, but you see it did wick up like once or twice each of those 2 touches, but then we have that touch point here as well, so that's yet another one. Then we have the touch point here, and then we have like 10 touch points here over like multiple days, and now a break above it. So this is clearly a break, and currently we're still above it based on these trend lines. Now, the main reason I think this is huge today specifically, the close today specifically is huge, is because we have gotten some breaks above this trend line before, only for a very short amount of time and only like one significant area, and that was back literally exactly a year ago in the summer of 2019. So what do you notice here? Okay, we had a massive break after running from 3K to 14K. Okay, we'll show you that here. Running from like 3K to 14K, absolutely exploding in these charts. One thing that we did was we peaked our head up here to 3,000 or 13,905, got pushed down, but we closed above this. Okay, we closed right here, this green candle, we closed right here. Then you see the very next day, we failed to hold that, okay? We got pushed back down. So we had a daily close above it. The very next day opened and closed significantly below it. Now, a few days later, so that was like June 26th, then about a week or two later on July 9th, we had a break here. We actually closed below it, and we opened obviously below it as well, and then we continued down, so rejection there. Same thing here. So those aren't significant, but mainly the thing I want to show you here is that we got a break above it here, and we failed to even hold above it for 2 entire days. We got a daily close, and the next day we got rejected. So that's something to note. Now, obviously, we've had multiple rejections going through these next few months, right? Rejection here back in February. Now look at this, you guys. Look at this. Same exact thing happened. And this is why this is really interesting, because this hasn't just happened once or twice. Okay, here we go here. We break above it here, significantly break it. What do? The next day, we close below it. So we couldn't even stay above this for 2 candles. We get above it for 1, close, immediately get pushed back down. Same exact thing here. This one pretty much just closed right on it and got rejected. But this one closed slightly above it and immediately got rejected down, guys. So now this is what's interesting here. I mean, actually, this is even more insane than I previously thought. So we have another similar break here, immediately get pushed down, and then we have a massive break above this line. But guys, what do you notice? Yet again, we failed to get that second candle in a row to stay above it. Every single time that Bitcoin has peaked its head above this level, it has gotten pushed down on the next day. So now, why is this important? For one, we got a very slight push here, and now I'm not convinced just with this candle, because depending on how closely you draw these trend lines, this could be subject to maybe not being as accurate, but this by far, I would 100% consider a true break. So why this is huge is because now we have this break here, and if we can close this daily candle above this level, then that will be the first time that we've had 2 consecutive daily candles above this 2.5-year resistance for, obviously for the past 2.5 years. So, I mean, to me, that is absolutely huge. I think a lot of you guys would agree that that is a hugely significant level, and especially considering how long we've been trading on this as of lately, as of the past month, all of May basically, and now so far the first few days of June as well. So that is insanely significant, and that's why I was extremely excited to get on this episode today. But we have more we want to get into specifically with this actual pattern that we have drawn in here, because this is absolutely even more impressive than what I just showed you. Absolutely huge. So guys, the level we have to close above to actually cement this is about 96.30. But let's be a little crazy and say, let's just, on the safe side, like 96.70 would be a great area to close above. That way we don't have a completely engulfing body right here. So anything above 96.70 currently, it's around 9,700. So we're really cutting it close. Hopefully we'll see how the day ends. There is about, as I'm recording this, there's about 8 hours until we get the daily close and we go into the weekend. And also, guys, don't forget the CME gap is coming up. So always keep that in mind on weekend trading. A lot of traders actually kind of bow out on the weekends, because it's a little less predictable and a little more crazy. A lot of Bitcoin traders actually kind of take the weekends off for the most part. So that's another thing to note if you are trading. But guys, let's actually get into this jam-packed information as well. This is absolutely just as interesting, if not more interesting than what we just showed. So guys, a descending channel, basically, you can see this white and blue line was our descending channel that we started in after that run from 3K to 14K, okay, back in the summer of 2019. And then we were in this descending channel until about January of 2020. Literally about 6 months we were in this channel. Now something key happened. We broke out of this massive channel here, and you guys can look on these lines. They are all completely parallel with each other, and the amount of touch points on this is absolutely ridiculous. So before we get into that, let me just illustrate that to you here, because it's absolutely insane how accurate it is. Okay, you can see each one of these lines perfectly kind of represents where support and resistance is. Okay, you see initial support here, get pushed down, you see where it finds support and resistance, okay, in a descending fashion. You see same thing here, we get pushed up, get rejected right at the top, and you see after we failed this line, we plummeted all the way back down to the bottom of the channel, found a lot of support right here, same thing going all the way up, and then when we finally did break above this actual descending channel in white here, you see it went pretty crazy, right? Went all the way, and the only reason I think that it got rejected, look where it got rejected. This green line, which is what? The past 2.5 years of resistance, the biggest area to break. So, I mean, obviously, that's why it got rejected, which at the time was also exactly 10,500, which is a huge level of resistance. So let's get back into explaining this again real quick. So then after we broke into that, these lines, these parallel lines, which are still perfectly parallel with each other, okay, the consistencies are insane here. Once that happened, these lines still respected those parallel lines. For example, found support here. When we broke, same thing here. We found support along this line, resistance along this line. When we broke this one, straight down to here, tried, failed right here. And when we did that, guys, what happened when we failed and broke out of this red channel here? When we broke out of this red channel, you can see not only did we fall, we fell pretty darn hard. Okay, first of all, we tried to find some support here at the top of this initial white and blue channel. And when we failed that, guys, and obviously that lines up exactly with what happened around the world, but you guys see when that failed, things literally went as low as they possibly could. And I can zoom out and show you that. When that line failed, when we broke back into this white channel, not only did it dropped pretty much as much as it could have dropped. Look at that, absolutely huge. But where we did find support was the bottom of this channel. Okay, we have a few touches down here, and we continued our climb here. So you can see here, found support, then on our way up here, same thing here. We found resistance and support, and we broke out of this. Finally, when we broke out of this descending channel again, you guys can see things got kind of explosive here, and we jumped back in here, we pumped all the way, and you see obviously where we're finding that resistance again. And guys, these parallel lines are still holding up. You can see it here. Okay, support here, support here. Then we have some support here recently as well. And we actually just got a touch. We wicked right down just a few days ago when we had that decent dump from 10,200 to 9,200, 9,300. We found support right on this line. Okay, so the fact that there are that many touch points on a simple pattern with literally just parallel lines, each one of these lines is going the exact same angle as the other lines, okay? They're all descending lines going the exact same angle. The fact there are that many touches, I mean, this is by far one of the most interesting and convincing, consistent patterns there is. Now, with that being said, there's also this ascending channel within this like descending, weird two descending channel type pattern we have here of these two. I have them colored differently so you can see the differences there. But obviously we have this, and this pattern here, guys, is what we've been covering for a long time, which is this pattern on this chart. So I just have a chart here, this same exact thing. These lines perfectly respect those lines on this upward momentum. You guys know this one. A lot of you guys have been asking about this chart specifically, which is also on T4. It's actually the Bitfinex one. So that chart is this one posted there. So guys, the accuracy, the consistency of those is huge. So again, kind of the main point of the video though is still that if we get a daily close above here, then I think that could finally cement actual bullish momentum. It's kind of slow and it's kind of boring, and that's exactly what I want to get into in this data here. So one of the things that it says here, a key highlighted point of descending channels, the price action for stocks trading in channels is often slow and boring. Therefore, trading action will appear erratic at times as price marches to its own beat. This will give you a number of false signals and head fakes as the action plays out within the channel, which we have undoubtedly had. For example, when the market got shorted, this is where there were a ton of liquidations, guys. This is perfect. When we had this break, this is normally where you would consider like, oh, this is a break, maybe a long the position. That's exactly why the other, whales or whoever did it, that's why they placed their shorts, because they know a ton of people are going to be placing longs right here as it's almost a confirmation of this massive breakout pattern. So they think, no, not today. So obviously they do the opposite. And guys, that's almost just common sense for them, right? So let's just go over some information here about this. So a breakout, one method to trade the breakout, if it's to the upside here specifically, we'll get into it here. Breakout to the upside means a possible shift from bearish to bullish momentum. This strategy will have you buying the break above the channel, which is exactly the example we just showed you there. It's recommended that buying into this break should occur after multiple tests of the upper channel line. This is huge. Have we gotten multiple tests of the upper channel line? Literally like dozens of them. Dozens of them within the past month, but also dozens of them going back over the past 2.5 years. All of these touches, guys. Every single one of these that you can see in this chart right now, touches here, 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 at least 20 different touches throughout daily candles on this chart alone, right? Reason being, breakouts early on in the channel often lead to traps as shorts push the price of the stock back down to the lower end of the channel. Guys, that is exactly what happened. That is exactly what we just described about the shorts right here getting pushed down, okay? So, that's probably the best way I have of explaining that, or just trying to help you picture that. It says here, I know this sounds a bit ambiguous right here. In terms of a breakout, the reason I highlighted this is because the market is going to do whatever it wants, and you need to be prepared to handle the action. People that are new to trading might be wondering like, why can't you tell me exactly what's going to happen? Literally nobody can tell you what's going to happen, and the more experienced you are with investing and trading, the more likely you are to say, I don't know what's going to happen, but I'm prepared to react if this or this scenario reacts. It sounds silly, but you need to be prepared for every situation, because even if you're the most experienced trader on earth, they will still tell you, nobody knows what's actually going to happen next. They know how to manage risk and reward, and they know how to tell you how they're going to handle the situations because they have them plotted out, but they will never be able to definitively tell you this is exactly the way that it's going to happen. So it says here, channels are better suited for traders that place trades within the range. The top of the channel is also known as the overbought territory for wick-off traders here. This means as stock approaches upper channel, there's a high probability of price returning inside the channel. Basically what they're saying here is that every time the price comes up to the top of this, there's a high probability that it's going to return and get rejected. Obviously that's just common sense, because especially with a 2.5-year resistance trend like the one we're seeing in Bitcoin. And then it just kind of goes into more detail about how you would trade that specifically, which I don't need to get into too much in this video. But yeah, I think that pretty much covers it. Covered mainly what I wanted to talk about. Let me know what you think. Do you think we're actually going to get a close here? Do you think we're going to close above 76.50? If we do that, or sorry, 9,650. If we do that, it's absolute bull mode, okay? Now, we do have the weekend coming up, so that's going to kind of throw a monkey wrench into everything. But yeah, we'll have to wait and see. Guys, thanks so much for watching. Smash it up to 1,800 likes, and we'll give this away in the next webisode. And I'll see you in the next one. Peace!